Matthew Warren's here with Business. The political problems in Egypt are taking their toll on the stock market, aren't they?
Yes, they were. The stock market trading on Sunday in Cairo, and share prices fell 10%. That's around $5 billion wiped off the price of shares. Well, until this weekend, the stock market in Egypt had been one of the best performing in the world this year.
He augmented his powers, but may have undermined his stock market. Last week's presidential decree resulted in widespread violent protests, chaos on the streets, to uncertainty on the trading floor. In the first trading session since what many of Mohamed Morsi's critics called a power grab, Egypt's benchmark index lost $5 billion. It seems the one power beyond the president's reach is controlling market confidence.
Recent political events have been reflected on the stock market. The benchmark index plunged 9.6%.
Political instability has caused a plunge in the index. There's no buying. Everyone's selling. Nobody's buying.
A change in recent fortune. Since Morsi was elected in June, the stock market had risen 35%, and last week Egypt reached initial agreement with the International Monetary Fund for a loan of $4.8 billion, money aimed at easing a liquidity crunch and boosting confidence. Now, some worry the country is headed down the wrong path.
We expected new investment and new policies from the state, but now we're losing more than we're gaining, whether it be in the economy or in politics.
For 2 years, political unrest has battered the economy. Still struggling to find stability and attract investment, Morsi has tried to reach out to critics, saying his new powers are only temporary, but he has yet to quell doubts. Both pro- and anti-government protests are planned later in the week.
Well, that's Egypt. Let's come back over here to Europe. Investors keeping an eye on the latest stage of the drama in Greece today.
That's right. Finance ministers will be meeting in Brussels on Monday to decide whether or not Greece should get the next instalment of money. Of course, Greece badly needs that money. It's running out of funds. Well, we can go live now to our correspondent in Brussels, Maeve McMahon, to get the latest on all of this. And hi there to you, Maeve. Now, we've been here many times before. What's really the sticking point in these discussions?
Well, Matthew, as far as I can see, the real issue really is how to really get rid of Greece's debt and makes Greece's debt sustainable. I mean, Greece, they're sitting on a mountain of debt at the moment. Their debt to GDP ratio is currently around 170%. And economists have warned that if they do continue along the path they're on at the moment, that it would be a disaster for Greece. And by next year, they could have a debt to GDP ratio of no less than 190%. But as we can see, it's literally the international lenders who are to blame here, continuing this carrot and stick approach, because they just can't agree on how to shave off this Greek debt. As you can see, there's a lot of opposition coming from Germany. As you can imagine, they're constantly saying there's no such thing as a free lunch when you're a Eurozone member. You have to fulfill all the requirements to do so. So a lot of the issues that have been floated are issues like, for example, cutting the interest rates on Greek loans, and as well returning profits from ECB purchases of Greek bonds. Seemingly that could generate about €5 billion. And of course, we're back to hearing about this haircut idea as well. But as I said, a lot of opposition coming from Germany. So the thing has been delayed for so long, and even though finance ministers met last Saturday, they still couldn't come to an agreement. So they'll meet tonight in Brussels to decide on that tranche of £31.5 billion that Greece so badly needs, as you said.
Maeve, I suppose the big question is, what are the chances of success?
Well, sure, like always here, I can never give you a 100% answer in that. If you ask Antonis Samaras, for example, the Prime Minister of Greece, he'll tell you that Greece is ready. In their last budget proposals for 2013, they said that they would carry through with spending cuts of €9.3 billion as required of them by the international lenders. And if you ask Juncker, for example, Jan-Claude Juncker, the head of the Eurogroup, and indeed Angela Merkel, the Chancellor of Germany, who was here in Brussels last Thursday for the EU budget talks, she said that today a solution would be found. So it looks optimistic, until yesterday the Finance Minister of France kind of threw a bit of a dampener on that optimism and said that today a solution might not be found. So it's very uncertain, and a message that we're constantly sending to the markets from Brussels, from Eurogroup meetings, and a message that is not positive at all. As I said already, Greece needs this money. They really need it, or they could be looking at a very, very miserable next few months. And the debt mountain is really, really flattening their hopes of an economic recovery.
Maeve, thanks very much. Maeve McMahon, a correspondent there in Brussels. So what about the markets then, Matthew? How are they doing so far?
Bit of a seesaw going on the Asian markets, at least so far this Monday. The Nikkei in Tokyo is off the 7-month high that it hit earlier in the trading session, now up about 0.25%. The other markets there all down. Shanghai down about 0.5%. Let me just tell you about US markets as well. It was a shorter trading session on Friday because of the Thanksgiving holiday, but they were all up over 1% by the close.
Now, plenty of shopping going on over this Thanksgiving weekend, in the US at least.
That's right, including by those traders perhaps knocking off a bit early on Friday to do some shopping, and they joined a lot of their compatriots, boosting the coffers of a lot of retailers by 13%, we are told. $59 billion being spent over the holiday weekend, 308 million store visits. Now, even faster, Stuart, is the rise in online shopping. That was actually up by about 26%, I should say, about a quarter versus last year. $1 billion being spent online. And I can tell you as well who the most successful websites were. Amazon at the top there, but 3 more traditional retailers also doing well with their online presence. Apple there in 5th spot.
Now, here in France, some strong words from the French government. This is about the steel company ArcelorMittal.
Yes, now this debate has been raging for quite a while, but the exchange is getting ever more heated. Now, this is all over ArcelorMittal wanting to sell 2 of its steel blast furnaces in a plant in the northeast of France. It says it's suffering from overcapacity and needs to trim production. Well, the industry minister Arnaud Montebourg has been increasing the tone of his language, and in an interview with Monday's Les Echos newspaper, he goes so far as to say that he doesn't want to see any more of Mittal here in France. He says that they just don't respect France. He says the company's been lying since 2006 when Mittal took over Arcelor to create this huge company. Now, what's going on is he says that he wants the whole site to be sold, whereas the company only wants to sell these 2 blast furnaces. Montebourg says that he's actually had 2 offers of interest to sell the whole site. He says he's even thinking about a temporary nationalisation of it to get his way. The company says that if they sell the whole site, then it'll threaten all of their operations in France, risking 20,000 jobs.
OK, pretty strong words there. We'll see, continue, of course, to follow that story here on France 24. Now, finally, Catalonians have been choosing their new parliaments, as we said in the news, but there is a little bit of light relief on offer at a Christmas market. This is in Barcelona, isn't it?
That's right. Now, apparently this is a very traditional, although it won't look, as you'll see from these pictures, as that traditional for Christmas, but these little figurines of well-known celebrities, sports people.
It still looks like you, that one.
Now, that rather inelegant pose is being
isn't it?
struck. Different colour glasses, Stuart. It's being struck by President Francois Hollande. You can see Spider-Man there. You can see Stuart there in his blue and white trousers. Now, apparently these are very popular. Let's take a listen to one of the sellers and also a shopper.
At the level of international politics, Francois Hollande, through our website, is selling very well and has proven to be very popular.
It's something very typical of Catalonia, and I don't know, they're pretty fun. Every year there are different figures, the new ones come out, politicians, artists. It's great.
They're quite fun, aren't they? I like the Obelix. It was great.
I'm sure there's one of you somewhere on the shelves there.
I think if there is, we'd better not show it. Thank you, Matthew. Matthew Warren here with the Business on France 24. The latest news headlines. Claire will be here after the break. Do stay with us if you can.